I'm Tom Lydon, editor of ETF Trends here in San Diego at the Schwab Impact Conference. I'm here with Steve Kreichman, executive director at MSCI. Steve, great seeing you.
Good seeing you, Tom.
So, booming ETF business, $2.4 trillion in the US, but most of us have to be reminded that it's really the core that index providers like you folks who built up this business. The ETF industry has enjoyed all the progress based on all your efforts. So talk about the evolution of indexing for a little bit and how important that's been to ETFs.
Well, the evolution of indexing for a firm like MSCI is really now going on 45 years of covering the global markets. Started off with just the developed markets, and in the late 80s added the emerging markets, and later on the frontier markets. An interesting statistic for you then, Tom, is in about 1988, about 1% of the global markets were composed of the emerging markets. Here we are now, 2016, and the frontier markets are about 1% of the global markets. So something to think about as we develop indexes and the products of the future.
Yeah, so talk about products of the future. I mean, it used to be cap-weighted indexes, now it's kind of evolved to single factor, and now multi-factor smart beta strategies in general are the rage. Is that evolution going to continue?
It will continue, and it is still market cap weighted products, right? At MSCI, we are the basis of about 850 ETFs globally, with almost 500 billion in assets in ETFs, off an entire asset base of about $10.5 trillion globally based on our indexes. Where do we go from here? There's so much happening in the market right now, particularly when you look at the regulatory environment, something like the DOL, right? Where we believe that not just the single factor products, which are great particularly for tactical users of ETFs, when you start looking at these multi-factor ETFs that have this great long history of performance, and you start measuring them up against actively managed mutual funds at high costs, we can really see a time here where the basis of these multi-factor products really begins to grow.
When you look around the world, and again, you've been kind of the global index provider, and you see in emerging markets and now frontier markets, the fact that exchanges are developing, technology is developing, more companies are becoming public, does that make it even a greater opportunity to provide additional indexes?
It does. It really does provide greater opportunity for us. There's just so many ideas out there. You know, people are constantly asking us about the certain weighting of indexes. Again, still, the majority of the products in the marketplace are based upon large, tried and true indexes like EFA, like emerging markets. But we're making great headway here in the US with so many of the factor products. The MSCI US Minimum Volatility Index, the MSCI USA Quality Index. All of those are the basis for products that trade in the market now that have seen tremendous growth in the last couple of years. I could even talk a little bit about some of the currency hedge products, and we've seen how those have grown over the past couple of years, particularly in an environment with a strong dollar and weakening yen or euro or other currencies.
Yeah, so more tools and more ETFs, more choices, but a lot of that has been from the development from firms like yours. So again, congratulations. And
thank you, Tom.
Look forward to seeing you again soon, Steve.
Likewise.
Thanks.
Good to chat with you.